All right. Good morning, everybody. Happy Monday. The morning show is live. We're here. You're here. What's going on? Hope you had a great weekend. Second weekend in a row that we had some interesting things happen on the political landscape that maybe or maybe not have market ramifications. We'll talk about that. We'll see what's on JC's mind. We'll see what's on Steve's mind. Guest today, Dean Christians from SentimenTrader. He is going to join us at 9, and we always love having Dean on the show. We'll have Kenny Glick. We'll have Ian Cully. So that's the plan. What up, chat? Let's go get the show started. Smash the like. Let's boogie.
All right, we back, baby. We are back. Hope everybody had a nice little weekend.
Lovely.
I just want to reiterate that price is what pays. I believe is the phrase.
Yeah,
Price
and you know, and you know what? That also applies to, I guess, the markets for politics, because Predict It nailed it again. The betting market got it right again.
Geo Bowden.
Yeah. Well, this cycle, JC, is different from any past cycle, election cycle for the news, because the mainstream media channels would always cite the CNN poll or the Quinnipiac poll.
The poll.
That's all over, because the rest of the world realized the polls are all bullshit. Let's pay attention to the betting markets. And now finally on CNBC, CNN, they're always citing Predict It. This is the first time, though.
These it's funny that you said that, because these things have been around for multiple elections already. Third or fourth election, if my memory serves. There was another one before Predicted. I forget the name of it. There've been a few over the years,
right?
But this is the election with the most liquidity, with the most notoriety. It's not just a bunch of degens on Twitter like us talking about it. Like you said, in the mainstream media. But it just goes back to, like, what do you even need the journalists for? Like, what do they say? The journalists are there to read Twitter to your parents, like at night, like is the old saying. Like, this is that.
Yeah,
right?
So I think that's an old saying from the 50s. Yeah, that's right.
Yeah, the old saying, right?
Yeah.
I mean, just imagine what it must be like being a journalist. It must be terrible. But nevertheless, price pays. And even in the chat, I got people telling me, oh, the old man's not going to drop out. All right, all the data says he is. Whether he does it, whether he doesn't, I don't give a shit. Right? He's not going to win anyway, so it doesn't actually matter. Now, as it turns out, Predict It was right the entire time. Geo Bowden was down 95% before this weekend, right? So crypto absolutely nailed it. The journalists nailed it. The people in the chat telling me that the old man wasn't going to drop out were wrong again.
The stock market nailed it. The rally in the banks, right? The stock market was pricing this in last week also. So
yeah, that's exactly right. So all right. So also another couple of interesting notes. I was in my in-law. I was at my in-laws' house, my mother-in-law's birthday party yesterday, and my father and my mother were there, and family and everybody. So they came over. My dad's like, "Oh, big news!" I'm like, "I heard." So my initial thought was like, "Okay, how does the market react?" They knocked down Bitcoin right away, right in the news that I think Biden's intern wrote like a letter on Twitter or something like that. Like, I don't even think he's allowed to use this on Twitter, so I don't know who wrote this, but it was interesting. As soon as it came out, they sold off Bitcoin right away. And then they brought it all the way back, right? You notice that?
I was on a boat. Is that what happened?
Knee-jerk reaction was a sell-off, 1,000 points, 1,500 points or so, and then they brought it all back. Next thing you know, a couple hours later, it's up 1,500 points.
I saw that.
Yeah. So I think that it basically, and then futures were up, right? I was waiting. This was probably like around 1 or 2 o'clock, if I recall. So by the time the market, I was curious to see how the market was going to open. My suspicion was that it was going to be a non-event, because this guy wasn't going to win anyway, and the lady's not going to win either. So, like, I was curious to see how the market.
You thought it really be non? I thought it'd be a lot higher than.
It's a non-event, Spencer.
Well, yeah, I mean, clearly, like, at least so far, it's been 12 hours, but
yeah, it was like nothing even happened, right? Because again, the market was already pricing in not a Democratic victory, and then this kind of just further reiterates that, right? Like, especially Newsom. Like, I think they're telling me that Newsom is the only guy who would actually stand a chance, but he's not dumb enough to ruin his political career by coming under this disaster. So he's going to wait another 4 years.
I also just don't think that you at this point, they waited too long, right? You can't skip over Kamala. That would, I think some people would be really upset about that if they did.
It would have if they skipped over her, it would reiterate to everybody who already knows that she had no business being vice president in the first place. So they don't want to do that, and they don't have anybody else either because no one's dumb enough to step up.
You guys know
it all
how.
Comes back, listen, it all comes back to the markets, right?
Yeah.
And that's the only thing that actually matters. And the market had already priced that in. There's no new news. It's just same old news. Anything that happened over the last couple of weeks or last couple of weekends in particular, to Spencer's point, kind of further reiterated that this has been a done deal for a while. And the market, the market is the information here, not the pretty lady on the TV.
Market called it, nailed it.
Yep.
Beautiful.
Okay, let's talk about the election cycle. Let's do a little state of the markets, and then we'll get into the election cycle. What do you say?
Sure.
Do it. All right, ladies and gentlemen, we've got the Dow futures up 80 points this morning, which is 20 basis points. NASDAQ futures, on the other hand, up a full percent this morning, over 200 points for the NASDAQ futures. So you got the Dow at 40,600, NASDAQ getting back above 20,000 almost. S&P 500 futures up 0.2%, right around 5,600 for the S&P futures. Wow. 30-year bond futures up slightly, 0.3%. Oil down almost a full percent, back down to 78, got hit at the end of the week last week. Copper down 1.3%, just under 420. Gold flat, just under 2,400. Silver down 1%, back to 29. That thing's been hovering between 29 and 31 for quite some time, with the volatility index hanging around 16 for the VIX. Over in funny money land, Bitcoin back down 500 points this morning. This is the 7th time in history that Bitcoin closes the week above 68,000, which was interesting. Slightly under that today, down 0.2% to about 67,700. Ethereum 3,500, down almost a full percent. Solana down 2%, 180. What a last couple of days for Solana. Binance, Strazza, back above 600, down 1/3% today. Total crypto market cap, Spencer Israel, 2.4 trillion. 2.4 trillion.
I like.
What stands out from the market? I'll start. NASDAQ crushing.
Solana.
Yep. That's not so much futures. That was kind of over the weekend, but yes, 100%. What a move. Solana summer. Strazza nailed it. Strazza, we'll give you your flowers. You've been spot on this one.
Solana.
Nice job.
Solana's been spot on this whole cycle, right? It kicked things off last year. It's been leading the whole way. It's always resolving its little continuation before the others. And I don't think this time will be any different. That's what happened this weekend.
Throw up slide 7, and then we'll get into the election cycle. So here's MicroStrategies. Just a nose hair from a new all-time high on Friday. Right there, a couple pennies away. So I just want to go over a couple of numbers. I know we discussed it last week, but you ready for this? MicroStrategies owns 226,331 Bitcoin, right? With Bitcoin right here, that's about $15.3 billion worth of Bitcoin. Currently, MicroStrategies market cap is $31.5 billion, which gives that 105% premium. So that's more than double the value of its total Bitcoin. Before MicroStrategy started buying Bitcoin, the company was worth about $1 billion. So even if you add that, still 100% premium, Strazza. I don't particularly see any reason to play this ARB. Short MicroStrategy, long Bitcoin. I don't see an edge there. I think it's more of a really interesting premium to point out.
JC, if markets were efficient, that would be a great ARB all day, right?
Yeah.
But we know they're not, and this thing could go on. This could be at a 200% premium or 300% premium before the end of the cycle. Things get crazy. So here's what you do. If it stops working as a vehicle, in other words, if it loses its correlation to Bitcoin, and Bitcoin's making new all-time highs and MicroStrategy is not, then fine, right? Then you could throw it out. There are other vehicles. But until that happens, I think this keeps working. It's a great levered vehicle. Here, why don't you throw up this Solana chart just to show the people what we're all so excited about? What? So any vehicle right now to bet on some sort of resolution from this range in cryptos, choose your fighter. What would it be? We got the Solana, we got the MicroStrategy, you got Coinbase. You can do some funky stuff. Did you see the Avalanche overnight? Yeah. Avalanche scooping and scoring. The miners still just red hot. Yeah. I don't know. What do you think today?
You know, I don't want to play this game of what's going to be better, what's going to be worse, particularly this late in the cycle.
Yep.
You know, a couple of years into the bull market. I don't really want to overthink correlations. Like this one's better than that one. This is the best vehicle to express a bullish thesis in crypto. I think if you like Solana, you buy Solana. You know, if you like the chart of MicroStrategies, buy MicroStrategies. Solana fails, don't own it. If MicroStrategy fails up here, don't own it. You know what I mean? Like,
yeah,
I don't think there's any reason to play that game. I think you could treat them on their own with an underlying kind of like tailwind behind them. Maybe the tailwinds are similar, but the execution vehicles, I think, might be a little different. Okay.
We've seen different vehicles work the best at different times. Not just in different cycles, just this same cycle, right? We had the Bitcoin miners were great last summer, and then the Bitcoin miners didn't participate earlier this year. Well, the MicroStrategy and Coinbase were great. So I think, like you said, don't overthink that. Look for some clean and clear levels. You know, charts where, look at Solana, just now resolving higher. MicroStrategy, not long ago, we could have played it right against the prior cycle highs. If you have a clean and clear level, right, and a way to manage risk, these things are probably all going to keep working, but continue to work at different times, and some better than others.
Yeah, no question. Okay, so throw up slide 2 there. We can get into the back to the election cycles here. This is Geo Bowden. So this was the meme coin. This thing was making serious moves and then really started falling apart the entire time that, and you know, and then after the debate, that debacle started selling off even more and just has continued lower. You had a little bit of a bounce following the prediction markets, which was interesting, right? So like when you look at these, like there's no like real history to these things. You can't go back and study prior cycles. They didn't exist. So it's really just acknowledging the behavior of these things in real time. And this thing's been a zero for a while. So this one absolutely nailed it.
This has been crazy. What's the Trump doing? The DJT?
It was up last night. It was
not actually, a lot.
It was actually in the 24-hour markets. It was the biggest winner last night. The Trump is
DJT.
DJT's up almost 1%.
Yeah, it opened way higher, but
it was up like 7% last night.
Yeah.
Mark's asking, what did the predicted number say Friday, Saturday for buying dropping out? It flipped early last week. So early last week, the betting market started pricing in a win for Kamala, or I guess not a win, but
yeah, it was predicted, and then also the poly market, both of them. So you got multiple this cycle, you know, and they're both, and they're not diverging from each other, which is interesting. Throw up slide 3 here. So this is that period, you know, going into the election, that tends to be choppy, right? Higher, lower, right? You know, with sentiment, you know, towards the more aggressive end. You know, I could see a chop fest at the index level and outperformance from perhaps the equally weighted indexes. Yeah, you know, maybe some individual sectors, right?
Oh yeah. You know, time really flies. I remember when we were looking at this chart in 2022 and being like, well, you know, during the midterm year, it's not unusual to have some corrective action. Now look at how far we've come. Wow, really nice.
Yeah, definitely. Okay. And then you could zoom in there. You want to zoom in there on the there it is. So that's that period that we're going into now. You know, strength in August into September and some weakness. You know, I think, you know, we don't want to necessarily overthink all this. I think some choppiness going into the election and then the ripper afterwards, I think would make a lot of sense.
August and September, not the best. Not the best for risk assets in general. I have a little heat map of it somewhere.
And then what about we got an alt, let's see here. All-time high in small cap industrials. Why don't you throw up slide 8 first?
And then throw up what I just dropped in.
So 30-month highs for both.
This is a big one.
for both small cap value and small cap growth. 30-month highs.
Because it's less about value and growth. What this chart is telling us, it's less about value or growth or which factor. It's small caps. It's more about small caps, far less about the factors.
And then throw up the next one.
Because JC, it's interesting, right? We always, when we talk about the Russell 2000, we always say biotechs and banks. Well, the banks are value and the biotechs are growth.
That's funny.
They split them off there.
That's funny. You're right. That's hilarious. I hadn't thought of it quite like that, but you're right. And a big reason that the small cap indexes have underperformed so dramatically, in part has to do with the amount of biotechs and banks, right? Yeah. You got over 200 banks, over 200 biotechs just in that one index alone. Yep. And then check out small cap industrials making new all-time highs, small cap materials pushing up against new all-time highs, small cap tech pushing up against new all-time highs. So there are plenty of small caps working, plenty of them, even individual small cap sectors that have been working. So if this is a great lesson, because if you're only looking at the indexes, you would think that small caps haven't been working. And then you see people like on the Twitter, talking about how small caps aren't working. Maybe their small caps haven't been working, but there have been a lot of small caps working. And by the way, there are a lot of small cap stocks. So, they're not hard to find. You just have to look.
And there will always also be a lot of small caps, especially in the Russell 2, that are not working and are just slowly heading to zero. That's just the dynamic of that index. Somebody on the Twitter was telling me, JC, just buy IWM. No, pick the best ones in IWM. That's
the opposite of what you said last week, Steve.
It's a trash index. It's not a vehicle. It's not a good vehicle.
And by the way, it might be a trash index, but the higher quality small cap index, which is the S&P 600, looks exactly like it.
Yep.
So the Russell 2000 might be a trash index in theory, but in practice, it's also a trash index, right? But I guess so is the small cap 600. If you're going to go there, they look exactly the same. Small cap 600 requires a track record of earnings. The Russell 2000 will let anyone in, but they look exactly the same. Like exactly.
You want to buy? You know what else is interesting, JC? We talk about banks and biotechs, driving the action in the Russell 2000. Two wildly different groups of businesses. They're both interest rate trades this cycle, both trading on the bond market, right? So you think, biotech's very different from banks. They're trading the same way. Yeah. That's why you got the breakout at the same time.
Yeah, totally. I mean, I guess further reiterating it was a rate situation.
Yeah, big time.
Right? Like we thought that, we figured that, the market's reiterating that.
Yep.
You guys are noticing how much information there is in the prices of assets, even in this election stuff. Like people say a lot of things, but money is what matters, right? Put your money where your mouth is. I don't give a shit what you think. The lady with the short hair or the guy. Doesn't matter. Put your money where your mouth is. They're just gossip columnists. Just because you went to an Ivy League school doesn't mean that you're not a gossip columnist. Like that's all you are. Like you don't actually matter. The money behind these bets is what matters. Like you're seeing it in real time, whether it's prediction markets or whether it's the stock market or the interest rates. Like follow the money, follow the incentives also, right? Like, if you understand people's incentives, you're going to get a better understanding of why they're behaving in certain ways. Like if you're wondering why the lady on TV is constantly lying to you, it's because it's in her best interest for you to be confused, right? Like remember these things. The money is real. This is real money. They're putting their money where their mouth is. And as it turns out, they were absolutely right.
Money talks.
Yeah. Great lessons.
All right. Let's bring on Kenny.
It's been a long time coming. They ain't come from my club, they took it. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
Fires me up every time, Kenny. Fires me up, buddy. What's up, my man?
Good morning. How are you?
Good morning. NASDAQ ripping this morning, Kenny. Is that surprising? To you?
Yeah, I was hoping. Well, actually, I was kind of hoping for a gap up so I could sell into it because normally Thursday, Friday week, Monday kind of week also turn around Tuesday. So it's kind of a monkey wrench right here a little bit. But I'm looking for residual selling as usual. But you know what? I was planning to chill today. I'm just trying to get my parlay in. I'm putting in a Obama Clinton ticket right now. I can probably get plus 1,700 on that.
Wow.
So
Wow.
yeah.
So
I'm
it
going.
would have to be Michelle though.
Yeah, I'm going Michelle Obama for president with a Hillary Clinton vice president
They'll
ticket.
never do two women, dude. They'll never do two women.
I know it's crazy, but that's why I'm getting good odds. It's plus now I can get plus 1,900 on that idea. So
I'll take.
sorry,
that,
19,000. So $100 wins you 20 grand.
Kenny, I'll take
Yeah.
that bet.
I mean,
I'll take the other. You don't need to go to the casino. I'll handle that one for you internally.
you'll take it for me. All right, cool.
Yeah, no problem. How much? How many thousand?
$100 bet gets me 19,900.
Yeah, I'm probably not going to do that.
It's not worth it.
It's not worth it.
Not worth it.
I don't like that.
Just remember when Tyson got beat by Buster Douglas.
That's exactly right. Yeah, I don't think I'm going to do that.
Yeah,
you're on your own there. All right. So interesting. Yeah. That's a zero. What's on the move this morning? Talk to me. Little DJT action.
actually, you know what? I'm sitting here looking at a screen that's not moving. I don't see anything. I'm just watching Verizon. I got a little Verizon right now.
Said no one ever.
Yeah, exactly. It's the only stock that reported. So once a stock holds a whole number, I get interested. It's old school trading. Get back above that whole number. You nibble at 40, looking at 39.85 as you're out. So if there was something to do, that's it. But I'm going to say something, and I like this part about trading. You don't have to trade. Again, I'm a little, again, I went to another Dead show last night. So Dark Star Orchestra all night at
How many
at
Dead
Asbury.
shows do you think you've gone to?
With Jerry, I went to about 60 with Jerry, but since all the cover bands, I don't know, it got to be another 100 shows.
Jesus.
Yeah, Dark Star Orchestra, they actually sound like the old Grateful Dead. They actually do sound like the old lead singer, Jerry Garcia and Bob Weir. So it was a lot of fun. It was down the road in Asbury Park. You don't even pay to go in. You just hang out in the field outside and just chill. Brought some sandwiches and a 12-pack of Red Stripe. When's the last time you had a Red Stripe?
Wow.
Yeah.
Probably last time I was in Jamaica, which was, I don't know, almost 20 years ago, 15, 20 years ago.
Yeah, I was thinking that you're smoking blunts and drinking Red Stripe right there in the field. It was nice. It was nice. Listen to music, and then here we are. Here we are.
So nothing going on today. And by the way, folks, this is a good lesson. And I had a hard time with this when I was younger. Just because you're not putting a trade on doesn't mean you're not working.
Right?
In fact, you're probably better off not putting a trade on. When you go back, you know what I mean? Like it's not like it's not something to keep yourself busy. It's not like, oh, I put 7 trades on today. I had a great day at work. Like, no, that's not how this works. You're not building widgets.
Flat is a position. We have a huge week ahead of us. So if you want to take off, on Monday morning, and again, what's going to happen today, you just don't know. If the market starts to roll over, I mean, for instance, with the Qs, now that we're above the 480, I'm looking for some sellers. Again, if there are some residual sellers, we get back below the 479.50, we probably will get a decent idea. But right now, back to the same thing. I just watched UVXY. UVXY had 5 up days in a row for the first time in what seems like a decade. No joke. It really, really never goes up more than 3 days in a row. So that was kind of worrisome going into Friday. So now that fear has been a little bit quelled, I guess, and you got the UVXYs down about 80 cents. If UVXY picks up any steam today and frightens this market, we could have just given it all back. And again, we are in a seller's type of market right now. So a gap up kind of frightens me. We'll see if the residual selling is still around like it was yesterday.
Can you touch on quickly before you hop? Why do you think this is going to be such a big week?
Earnings. Earnings. Yeah. We got Tesla, we got Amazon, and then just a massive influx in the next 2 weeks is going to be huge. And again, that's what I look for. That's why I'm talking about Verizon. I never trade Verizon, just like a lot of these stocks.
Not a candy stock.
I never trade AXP. And by the way, I'll never trade AXP. I took a big loss on AXP on Friday. I got a little greedy. I kept adding to my position. Next thing, it rolled over and crushed me. But usually I'm focused on earnings reports, and there is the only one this morning. So I'll keep an eye on Verizon. But like you said, there's no shame in just chilling. There's going to be plenty to do maybe later today, or the market will be open tomorrow.
Was it Carl Icahn who said my best trades ever when I sit on my hands? Was it Icahn?
I think it might have been. Yeah.
I think it might have been Carl Icahn. Like a lot of great quotes from Uncle Carl there.
I love it. Professional non-traders. That's what we are. You gotta know when to hold them, and all that song lyrics and stuff like that.
We are not traders. We are order enterers.
Yes.
That's Peter Brandt. We got to get Peter Brandt on the show, but Kenny Glick, don't be a dick. Vote Glick.
We got to talk more about that for real now. I mean, maybe if the Democrats would have me, maybe I could take over the party. I don't know if they'll have me back.
If you run for president for the Democrats, you could run for president for the Communist Party. I'm in. Baby. Let's go.
Kenny, I thought I saw you on Predicted. I guess that was a dream.
I don't know, but I was at the bagel store with my shirt on, and I started talking to a few people online, and I got 3 more votes. If I was allowed to talk to America, I would win. I really am actually
we have the worst bagels.
President.
Where I live, it's the worst bagels. It's all Gentiles where I live. We don't have any Jews in this whole area. It's like it really makes me very mad.
Yeah, once you come out of New York and New Jersey, they don't know what they're doing.
They don't. It's mind-boggling just how bad.
Yeah,
it's terrible.
Those weird processed ones with just awful.
It makes me so sad, man.
Yeah. Well, on that note. Later. See ya.
All right, guys, join Kenny's room. See ya. He's going there now. Actually, he was live. His room was up at like 7:30. It was up like an hour ago. He was up early this morning. He's very hyped on Mondays with a new week. Okay. 8:59. You want to bring on our guest today?
Please.
JC?
Yeah, let's do it.
We got Dean Christensen in the house, senior research analyst, SentimenTrader. See, he sent over a chart. Bonds, I think it's slide 18, I want to say. Let's book it. Here we go.
Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Dean, what's up, my man?
Hey guys, how you doing? Thanks for having me on.
Thank you for being back with us. This is great. Bull market. Are we gonna fight it? Are we fighting this bull market, or are we embracing it, Dean?
No, I think you got to embrace it. Obviously, this broadening out is the way I've been framing it is that it just pushes us out further in time. Typically when markets peak, right, you have a lot of 52-week lows coming in near high. So with this market broadening and extending upward, you're not going to see that anytime soon. So I think obviously we're in sort of a transition here. We don't know what's going to really be leadership. I mean, currently it's still technology. So got to give technology the benefit of the doubt, but you need to keep an eye on some of these other groups in case we do transition.
And then when you mean technology, you're talking about large cap tech, you're talking about down the cap scale. You think small cap tech is still a leader down there? It hasn't been, right? It's been more
predominantly large cap. I mean, you can go down and find some interesting names here and there, and really you can do that with any sort of sector as well. Even though tech's the leader, you can go find good-looking charts in financials. You can still find good-looking charts within industrials. And again, you go down to that cap spectrum, and there's still good-looking charts. It's just that you don't have a sector tailwind in certain groups. Right now you got a sector tailwind still in technology. Even though it's, look, it's already corrected 7% off the highs. I don't know if anybody's really been paying attention, but it's down 7%. The S&P is down 3%. So you've had a little bit of a pullback right here. And you could pull back some more, but the bull market is still intact.
Why don't we talk about a little bit about sentiment and where we're at? Little hot, coming in a little hot. Got hot into February, cooled off with that market correction that we've seen, and now more recently, that sentiment is coming back. You want to touch a little bit about that? I know you guys do a lot of work there, of course.
Yeah, absolutely. No, it continues to remain elevated. I updated a bunch of stuff last week, and I've got a composite, and it sort of popped up right at the upper end of the range that it's been in. After having fallen back a little bit. So sentiment is still very optimistic. And, as we all know, that's how it generally is in a bull market. I mean, people are optimistic. It's when it reverses and goes the other way is when, you have to be sort of careful about, a potential market peak. So
yeah, our old pal Willie Delwish, we got to get Willie back on the show, Spencer. As Willie says, you need bulls to buy stocks to have a bull market.
Exactly. Yeah. I mean, it's when people get sort of depressed or it's usually some sort of event that triggers it, and then all of a sudden people realize, oh, wait, maybe I should take profits or maybe my thesis is wrong here. Let's sell a little bit. And that, just sort of feeds upon itself. It's kind of like everybody doesn't want to be the last man out the door,
It's like musical chairs. Right?
Exactly.
Can you touch on kind of like the, when sentiment gets a little hot, gets a little optimistic, the timing is tough. It seems a lot more reliable when sentiment gets super pessimistic, right? In extreme levels of pessimism tend to be much more powerful signals than optimism. Can you touch on that at all?
Yeah. So, look, I write code and I've spent, a tremendous amount of time trying to come up with signals, risk off signals with sentiment. And it just doesn't work as well as when like you're saying, when you have this periods of pessimism, and then it reverses. Those tend to work much, much better in terms of forecasting future returns. So, yeah, you're better off saying, all right, look, let's use sentiment to time lows versus highs. Not to say that it can't be done. It's a precondition, and you have to have other things align at the sort of same time. You have weakening breadth, overly optimistic sentiment that sort of turns down, and then maybe something in the credit markets that's not acting right. And when you get sort of this weight of the evidence, is when you need to be careful in terms of a market peak. But look, I don't think you should use any tool in isolation, right? I mean, it has to be a weight of the evidence approach, and sentiment fits in that same category. It needs to be, agreeing with other measures that are showing, that you're going to potentially get a risk off period.
Wait, why do you think sentiment as an indicator is less reliable at the top or near the top?
Well, look, I mean, generally markets go up, right? Over time, they just generally rise. So it hasn't paid. I mean, again, you got to have people that are bulls to have a bull market, and it just tends to not work as well as when you get those pessimistic extremes near lows.
Dean, can you talk about the percentage of S&P 500 members outperforming the index? Can you walk us through what you're seeing here?
Yeah. So listen, this sort of just kind of gives us a framework to work off of what's happened here over the last, couple of weeks. And so on July the 5th, percentage of S&P 500 members outperforming the index, fell to 14%. All right. So that's the lowest reading in history, going back to 28. Just want to let everyone know, obviously S&P went to 500 stocks in 57. We use a proxy. It's the 500 largest stocks by market capitalization prior to 1957.
That's cool. That's cool that you do that, by the way. That's really interesting.
Yeah, I think it's, and again, it's not perfect because we know that prior to 57, it was only a 90 stock index. But to give
but what is perfect, Dean? Is there anything that's perfect? Right?
Exactly.
I guess it's pretty damn good,
Yeah. So anyway, listen. So this is what, what's happened here in the last couple of weeks is just a reaction to this, really. Okay. Everything else was underperforming the S&P, which we know is being driven by a handful of names. And I wanted to show this because, look, back in 55, GM was 10% of the benchmark. Okay. So, there is a precedent for this sort of concentration, at the top of the S&P 500. And having everything else sort of underperforming over a short period, which is 21 days. Let's be honest, that's a pretty short period. We'll say this: I do measure this for 63 days, and it fell to the second lowest level. Only 55 is the only other time that it was that it was lower. But again, this is just telling us that we were due for a bounce back in the average stock, and then that's what we saw. I mean, we know positioning is completely offsides in terms of everyone had crowded into sort of the mega cap tech, left all these other sectors and groups for dead. They've been laggards. And so we just had this massive reversal off of that. And again, the way I'm framing it is broadening is not rotation. Okay. That doesn't, just because we have this broadening doesn't mean we're going to have a leadership change. We could, but it's too early right now. The jury is still out. If you just kind of look at any sort of traditional relative strength stuff using, medium to long-term indicators, it's still showing tech is the leader. We've seen improvement, out of financials. We've seen improvement out of industrials. We've seen improvement out of small caps, but we're not there yet. So it's too early. Everyone that's saying great rotation, in my mind it's too early for that. Is it a potential? Sure, absolutely. But we got to be careful that this just wasn't positioning way off sides. We get this big thrust, right? And then we sort of just roll back over into the same sort of leadership that we've been exhibiting here for the last 6 months or so.
Dean, what do you think about I forget who said it, and it pisses me off that I can't quote them because I hate taking people's quotes without giving them credit, but I truly just forgot where I got it. Somebody over the last week, whether they said it or they tweeted it or they emailed about it, I forget, was talking about the anomaly of small caps. And what if the anomaly wasn't this monster move in small caps that we've seen recently, but the anomaly was the underperformance for all those years prior, right? And I thought that was kind of an interesting kind of flip it on its head. What do you make of that? You think I'm overthinking it? Or you think there's something there?
No. Listen, JC, I think there's something there. In the textbooks, and if you followed the market for a long time, we've been sort of trained on this. Hey, value is where you make all the money over the long term. Well, I'm not so sure that's the case, on a go forward basis. And really probably this started, back in 2009 and maybe in some of it, in the late 90s. But my opinion is that, growth may be the area where the money is made. The big money is made. Okay. And so small caps would fit into that, right? So small caps would be the laggards, the industrials and financials and stuff because you start thinking about it. What has happened to stuff like financials? Well, they've been regulated to death. Okay. Well, it's pretty hard for those to be big secular winners when there's so much regulation weighing down that sector. And same thing, it's happened with industrials over time and stuff. So yeah, I think there is a case to be made. That's not to say that value and small caps won't have their day, but go pull up a chart of it's Russell 2000 since 1979. It doesn't trend like something like technology does. Well, and we know there's structural flaws in the indices, right? The good ones graduate, they move up. The bad, shitty companies stay in the Russell 2000. Okay. But the simple fact is they just don't trend like something like technology, even consumer discretionary communications now. So I think that, look, they're again, the jury's still out, but I think there's this favorable tailwind for growth, which means that, small caps just are going to do nothing when you have these big secular bull markets. Look, we know you still buy the small caps coming out of bear markets. Okay. That's been proven. It's a winner on a relative basis. Same thing you could say for the equal weighted, which, is just another way of kind of saying small cap. They'll have their days, but you're going to want to own them on an index level coming out of bear markets or growth scares. Of course, it hadn't worked this time. And again, that goes to how unusual this cycle is. Warren Paz did a great piece, and he posted on Twitter not too long ago, comparing all these bull markets. And, one of the things I just went and looked back at, though, was, look, coming out of this low in October of 2022, the Fed had raised interest rates 5 times. 1 year later, right, that went from 5 to 11. Okay. That's never happened. Okay. You've never had a year later where the Fed's still raising rates and we're still sitting on 11 rate hikes. So the environment that we've seen here in the last year and a half, 2 years is really unusual. Making comparisons, to these other bull markets, in my opinion, is probably not the right thing to do.
Oh.
And that's why these small caps have lagged. I mean, interest rates are still high, and that impacts these small caps.
Why don't we stick there? What are you thinking about rates? Biotechs and regional banks really got going at the same time as rates started to roll over. We kind of all assumed the pressure in these small caps and the heavyweights in the small caps, like regional banks and biotech, were because of rates. And we were just saying that the market kind of just reiterated that more recently as they broke out together. They're very different types of companies, but both very interest rate sensitive. So should we be expecting a big move in rates, or is this sideways churn, messy market something that the stock market really likes and that is likely to continue perhaps?
Well, it seems like the stock market has liked just sort of this pause, obviously. And you've seen the long end come down. But, look, just because we've had this, a soft report here on CPI and everybody gets their hopes up that, we're going to have this rate hike, easing cycle. It doesn't mean that things have changed overnight. What was plaguing small caps and some of these other groups really hasn't changed all that much. It's just this excitement that it could change. Of course, and what we all know is everyone's been off sides and misinterpreted this for the last year. I mean, remember coming into this year, we're going to have 6 rate cuts. Now we're down to maybe 1 or 2.
We all knew that. We all knew that was wrong. When the economists were so sure about it, we all knew that.
Right. But so yeah, I mean, look, to me, and I was listening to your previous guest. When things get like they are right now, I tend to just sort of get more like neutral. And what I mean by neutral is if I was holding semis, or if I was holding tech, or if I was holding some other group, I might exit those and just go into the S&P. And then that way I know. All right, well, if the S&P goes down 3% and tech's down 7%, I'm going to be just sort of hugging my benchmark, and a lot of times I'll do that here. We've had this, like you said, we've had this big move. Let's let things sort of shake out here and then see if from a relative perspective that these small caps pick up, or that financials pick up, or some other group sort of picks up the trend. And then just continue to watch tech and see what it does.
What do you think? What do you think the market's missing here, Dean? We talk about a lot about rates. You've seen some of this rotation. You've certainly seen the breadth expansion, most definitely. What do you think? What do you think people are not talking about that you think is worth mentioning?
Well, again, I just think this sort of unusual bullish trend, that what we've seen is just that rates are higher. The Fed funds is higher as we've progressed higher in a bull market. And so if I had to say, what are they missing? Just, be mindful that this was not a traditional recession sort of bull transition from a bear to bull market. And, don't rule out that leadership just stays how it is. And the rest of these groups kind of roll back over some more, or they just lag. It doesn't mean, just because they lag, there's, they can still go up, which is fine. There's still places to make money. But you just need to be mindful that, we could still be in a technology innovation driven bull market. Now, the other thing is and I'm pointing this out to several people, is, you could have tech take a breather here. 95, 96 is a perfect example, which we talked about, the last time on the show, is that, tech went down 20%, semis went down like 38%, semi equipment went down 60%, and the S&P only corrected 7%, peak to trough. So, you could have a situation. Now, is that likely this time? And the reason why I say that is because, these tech stocks are such a high weighting now in the indices, whereas back in 95, 96, they weren't quite as high.
Yeah, there's no way that can happen now.
Yeah, I mean, if tech goes down, the S&P is going down, but that doesn't mean that you can't make money in other places. We saw that in 2022, right? You could have made some great money in energy in 2022 if you were in that and out of the S&P or out of tech. So there are these opportunities out there. You just gotta dig under the surface and find them. But right now you still kind of have to lean a little bit towards that sector leadership.
Dean, what would have to happen for you to be like, I should probably own some more small caps?
My relative rankings need to improve. Okay, so I rank everything versus the S&P 500, and the only thing that actually improved and got up to a positive score here recently was small cap financials. So when we had that big expansion and I put a note out on this, but we saw 21-day highs for the small cap Russell 2000 jump above 50%. Most of those, that was primarily driven by financials, small cap financials. And we know what we talked about earlier, regional banks really, shot up. So, something where they start to show positive relative trends. That's what would get me excited. Every in a bull market, everything's going to have a pretty good absolute trend. Okay, everything's going to be above the 200-day. The 200-day is going to be rising. What matters in a bull market are relative trends, and so I rank all the sectors. I rank individual stocks, and then that's how I decide where I want to be, weighted. And but right now it's a real mixed message. But we are seeing improvement, in things like small cap financials.
Yes. New 52-week highs for small cap financials, new 52-week highs for the regional bank index, kind of the same thing, right?
Yeah.
Dean, can you touch on the election cycle a little bit? An assassination attempt last week. The president of the United States dropped out of the election this week, and the market just doesn't care at all.
The thing about the seasonality stuff is look, it's for me, it's a third or fourth sort of tier indicator. Does it confirm the trend? And so, yeah, I think the presidential cycle, we get some softness here in the fall leading into the election, sort of sideways. So, I don't see anything that says, all right, look, cycle doesn't look good and it's being confirmed by breadth or it's being confirmed by trend. So, net, I would say seasonality, whether it's presidential cycle or any of these other studies that, a lot of guys have posted on Twitter, that all is favorable. Put that on the bullish side of the ledger and, and just go from there.
What about crypto? Any thoughts there?
I really haven't, I keep an eye on Bitcoin. I don't really keep an eye on anything else. But we had a nice move up, and it looks like we pulled back. Whether that was on some of the selling that you've potentially heard out of I guess governments or whatever, what have you. But right now financial conditions are favorable, and typically when financial conditions are favorable, Bitcoin does well. So
what does that mean exactly? Financial conditions?
Well, so I
market or
yeah, I mean it's looking at things like what are the dollars doing, interest rates, credit. The one I use is the Goldman Sachs Financial Conditions Index, and I've created a model for that. And when I created it, I just created it for stocks, but then I applied it to Bitcoin. And I was like, wow, this works really well. So right now financial conditions are on a buy signal. And Bitcoin shot up. What do we get up to, like over 70,000? And then we've obviously pulled back, and then we've started to move higher again. But when financial conditions are easy, crypto does pretty well. So I would expect that crypto probably continues to lift here, and obviously Trump gets in there. Everything you sort of read and hear, crypto should be okay under that sort of regime.
The next vice president of the United States is a Bitcoin hodler.
Yeah.
I mean, how many presidents or vice presidents have you had in history that own this much Bitcoin? 0.0, Mr. Blutarski, right?
So the question is, though, what do we do? We got Bitcoin, blockchain, and then we got AI. What do we favor out of those two?
It's way above my pay grade, Dean. You know, I see line go up. I mean, that's
yeah. If it's moving lower left to upper right, you want to own it. That's
good enough for me. All this AI stuff, and the blockchain. I've learned a thing or two. I've learned just how little I actually do know. AI. I mean, I could barely spell AI.
Yeah.
Nice.
Well, look, I mean, there's lots of people making comparisons to 95, 96 with, the internet. And so we're early stages. And look, that may be true. I mean, you think about it like, 90, I think it was 96 when Netscape went public. I mean, it went up a couple 100%,
Yeah.
And then you sort of had, you had a bull market in tech, but like the internet stuff really didn't get going for another, 2-3 years later. So, we could just have this sort of quick land grab right now, and then things sort of settle out, and then people start to really find these use cases, but it could be years down the road before, it really, really benefits most of society. Right now we know it benefits some people that are using it, but it could be early innings.
Yeah. I mean, it took a decade or even more for some of these .com ideas to play out. Right. I mean, Chewy is basically just pets.com, right?
Yeah, exactly.
So granted, the rate of change is always increasing. So, things are always moving faster. So shouldn't take that long, maybe like a decade or as long as it took, but still, I agree with your point that might take a little while. So anyway, Dean Christians from SentimenTrader. If you don't follow Dean, the link to his Twitter account is in the description. I highly recommend you do. Check out SentimenTrader. They do tremendous research. And Dean, we thank you for stopping by today.
Thanks for having me on, guys.
Thanks, Dean. Appreciate it, my man.
Yep. Good to see you.
Adios.
Good stuff. I like what he was saying about the well, actually, I pretty much agreed with everything he said. So
listen, he comes to the market from a traditional CMT standpoint. Does a lot of sentiment work with SentimenTrader and everything. Love that. I think it gets back. We got to get Willie back on the show. Willie, he always says it. You need bulls to buy stocks to have a bull market, and those signals tend to be much more reliable at extremes in pessimism, not in optimism, right?
Yeah.
I got a chart here for you, Spencer. Slide 3, please. That I want to talk about because we were just talking about breadth, and it's kind of my bad. I wanted to mention this earlier in the show. It's the Dow Jones Industrial Average. Highest weekly close in history. Also last week, we got the highest reading of stocks in the New York Stock Exchange above their 200-day moving average this entire bull market. Do you know how many times that happened in 2021?
How many times we got the highest reading of stocks above the 200-day moving average?
Yes.
In 2021 for that bull market cycle?
Yep.
I think that was a pretty rip-roaring bull market, right?
Nope.
So
0.
What? How can that be?
Because it was not a rip-roaring bull market. Actually, that bull market peaked in February of 21. It took another 9 to 10 months for the indexes to peak. But by then, most stocks had already been rolling over. And you saw that in the percentage of stocks above their 200-day moving average. It didn't even happen once all year. That actually peaked in 2020. So it didn't happen at all. Breadth was deteriorating throughout all of 2021. And then the so by the time 2022 came and the indexes were selling off, people were all surprised. People who I guess didn't bother to count. Most stocks had already been falling for quite some time in a very similar way that by the time 2023 came and people were so surprised about the new bull market, that had already been happening in most stocks for the prior 6 months, right? Which is why it's so important to go and
that's true. I mean, I mean, you can look at a chart of ARC, which says exactly what you just said. So,
no,
it does.
Why? Because ARC peaked in February of 21.
Yeah.
Well, that was the poster child for that particular cycle.
I know, that's what I'm saying.
Lost its luster in terms of like use cases, like
that's the proxy for the
buys high and sells low. It's like a really weird strategy. I don't really understand that buy high, sell low strategy that she has.
I don't know.
Maybe that's why she has lost investors the most money of any ETF provider in world history. So I guess that's the strategy for that sort of.
But in order to lose the most, you had to have made a lot prior to that. All right. It's like the stat about the teams that have lost the most in the finals. You got to be in the finals to lose.
That's
in the
right.
finals.
People are like, oh, LeBron's lost a lot of finals. Well, he's been in a lot.
Yeah.
Brady lost a few Super Bowls too. You know.
Speaking of things that you wanted to bring up earlier in the show, I had a stat that I saw yesterday that I actually didn't believe it, so I fact checked it and blew my mind. On the topic of the election and politics, this will be the first presidential election in the U.S. since 1976 without a Biden, a Bush, or a Clinton on either ticket. How crazy is that?
How many years?
1976. 50 years almost.
A Bush, a Clinton, a Obama?
A Biden, a Bush, a Clinton.
A Biden, a Bush, and a Clinton since 1976?
Yeah.
Wow.
God, let's get some new blood in here. Sheesh. All right.
You don't think Hillary's going to come out?
Yeah, that's what all the responses were like. Oh, don't say it yet. Too soon.
Dude,
Whatever.
there's a video that was going around this weekend, and it was like the Clintons and the Obamas were there and everything like that. And I guess like Ivanka Trump walked out, and Bill was just staring her down hard, and then Hillary like catches Bill like staring at her, and she's just like,
oh, not from this weekend. Like
no, but it was making the rounds this week. It was actually pretty funny.
I believe that.
Bill,
totally.
what a creepy old man. He's the I mean, geez, Louise.
Okay. 9:28. Let's just run through some news real fast. They're actually
hold on. Before the news.
Yeah.
I'm gonna hop a little bit early today, but I wanted to hear Strazza's thoughts on this last chart. Any thoughts, Strazza?
Show me. I was
Dow Jones Industrial Average, highest weekly close in human history, and most stocks above their 200-day moving average on the New York Stock Exchange. This entire bull market cycle, it happened 0 times in 2021, by the way.
Yep.
Just happened this week.
This is the catch-up, right? NASDAQ and the S&P.
Catch-up, or is it a breath expansion?
It's both.
Oh.
Woo! Excuse me. Look out. Mic drop.
Same thing with Russell 2000, right? These are value index.
Ladies and gentlemen, the Bill Clinton of technical analysis.
So these, just like the S&P 500 and the NASDAQ 100, as you know, have a heavy tilt towards growth. The Dow and the Russell have a pretty solid tilt towards value and cyclicality. And with this breadth expansion that we've seen over the past, 2 weeks now, all of these groups that were left behind are getting bid up again. So I think Dow over S&P and NASDAQ into the back half of the year is probably the move if you're an index person.
RSP over SPY?
This is Q4 of 2022.
Woo!
Ooh. Whoa.
All right.
That
going back to inception, the inception of RSP, the equally weighted S&P 500 is actually outperformed the cap weighted. All right. I know we're going to do recess a little early. What was that?
No.
What was that? Throw it up. I saw that.
I got a bunch of pictures. I was going to do a bunch of pictures.
Hold on. I want to see that. What is that? Why is Strazza's ass with a dog?
Oh, just bring it up. Forget it. Come
on.
on.
Bring it up. What is this?
Right.
What is this? You actually caught one this time?
No, so we had a boat day yesterday. A buddy of mine's got a beautiful boat. He just fixed it. And I haven't been getting out on the water the way I used to because I golf in all my free time now. So we went out there, not even 15 miles off the coast. We were deep sea fishing. We were in like 400 feet of water, caught a couple mahi. Look how beautiful that fish is. Now,
gorgeous.
Disclaimer, I did not catch that. but I did eat it, and it was fantastic.
Did you cook it or just eat it there?
No, we cooked it. I don't want to do the mahi raw.
I don't love the mahi. I guess it depends where I am.
If we pulled in a tuna, which I was hoping for, would have cut that thing up right there. But the mahi, no, we took it home, fried it up. It was lovely. And then here, show the other ones. I drove the boat.
We got
El Capitan.
More pictures. Is there anything better than having a friend with a boat? Nothing better.
That's the best boat to have, is somebody else's boat.
Somebody else's
100%.
boat.
I just want to quickly look at this guy.
The only way.
You didn't drive it either, right?
No, I was. Dude,
did you do anything? You didn't catch any fish? You didn't drive? What did you do?
You got to show the last one.
All you did was eat. That I believe.
I took a nap. I steered for a while. It only goes it only goes like 30 miles an hour. was like a 60-foot boat. So they're slow moving. You feel like you're going 50.
All right, guys, listen, I got to hop. I just want to address Rajesh talking about how the Dow's only 30 stocks and the 200-day moving average. This is on the New York Stock Exchange, Rajesh, and the New York Stock Exchange has over 2,000 stocks. So we're not talking about the Dow. We're talking about the Dow making all-time highs because it's the world's most important index. But the world's most important stock exchange, where the most important stocks in the world trade, you see. Beautiful building, by the way. Most stocks on the New York Stock Exchange above their 200-day moving average, and these include international stocks as well, because that's the beauty of the New York Stock Exchange. All right, guys, love you guys. Adios. Try not to get us canceled.
Have fun today.
Adios.
Bye.
What? JC's going to the water park or something? I don't know. Okay.
Throw up the last one. So this is how the day ended on the boat.
Oh, one more picture.
Just throw up the last one. JC asked, "Did I do anything?" We took the most beautiful nap. It was both of us zonked.
Look, man, being out in the sun is tiring. It's hard work to be in the sun.
Oh, that boat, it just rocks you to sleep too. It's just like I felt like
nice. That looks like a very nice boat. I will say that. That looks like a really nice boat.
It was fun. It was a lot of fun.
Yeah.
So it's always nice to get out there. All right, we did an early recess.
Look at that. Okay, some headlines real fast. I think we have the Ryanair chart floating around here somewhere. That's kind of the big earnings report of the day, and they're getting smacked around. Last I saw, down 15%, maybe more now. Let's see. What do we have anything off the open in Ryanair? Nothing. Yeah, it's down 18% now on their earnings report. They have too many flights, turns out.
So in today's installment of You Can't Own These Stocks, Ryanair gets absolutely slaughtered on bad earnings. And this is one of the ones that just last week, Spencer, we were like, oh, well, Ryanair looks good. That's
I know. I think I did say that.
because it was true, but you can't own these stocks.
Their revenue, what did their revenue fall? Their revenue dropped, what's it like 14%? Oh no, 46%. That was their guidance. They guided for a 46 drop in revenue, 46% drop in revenue, year over year.
How does that happen?
It's probably just a glut of flights, not too much supply, not enough demand. Oh God, what a terrible. Yeah, that's not good. Okay, so that was kind of the big earnings report of the day. It's kind of quiet. Mondays are always quiet. Tuesday, Wednesday, Thursday will be big. We'll talk a lot more about them as the week goes on. I think we have a CrowdStrike chart as well, which is down again today. I'm always very curious to see the follow through.
Yep, right. Right. So you want to see something like this build out some sort of a tradable bottom as soon as possible, right? You want to see the bleeding stop. Today, and this was kind of, you had to expect this, right? The sell side is hitting them with, they're going to lose business, right? It's reputational risk, They're going to have problems getting contracts in the future, maybe. I would think that if that's true, and I don't know if it is, I doubt that it is. If that's true, then who should we be looking at? Zscaler, Palo Alto? Like, who takes their business? I'm not sure.
Well, you look at the stocks that are trading up. So Sentinel-1 is up again this morning. It's up 10%.
There you go.
Who else do we have?
You're right.
That jumps out to me.
I like
who jumps out to me.
Dude, this chart looks fantastic. Can we mark this up, Fonz? Sentinel-1, right against those summer highs from last year. That's a good call, Spencer. Zscaler, a little bit, probably also in sympathy.
Yes.
Palo Alto, but I think that's a different business, Palo Alto.
I don't know.
So that's what it is. I think Guggenheim came out with a note saying they're going to.
They did. That's being blamed this morning. So CrowdStrike down 8%. Josh Brown had a good post over the weekend about what do you do when you own a stock in a shitstorm through no fault of your own or anything like that. And basically the conclusion was, if it's for a trade, get the hell out. If it's not for a trade, then don't overreact.
Buy more.
I don't think he went that far, but
here's the takeaway for CrowdStrike last week. It was Friday, right? On Friday, it was like the whole world came to a stop. Schwab is down. The SEC Edgar database is down.
Oh, wait, Schwab is down. Everyone stop the presses.
Yeah. So everything's down. And then everybody's looking like, oh, let's kill this stock. Let's sell it. How about take a step back? These are all their clients. These are counterparties, the U.S. government, the big setter, right? You go right on down the line of all the things, Microsoft Office. These are the companies that CrowdStrike does business with. Couldn't be a better portfolio of business partners. How important is this company? I think that was the takeaway. This company, this is also I want to own long term.
Also, the stock was up on Friday from an open to close basis. If you just ignore the pre-market, right, go open to close, it was up. Right?
It'll get up today too. People are dying to buy this thing, and it's right back. Did a round trip right back to those prior cycle highs around 300. I think this is great. This is great. Yep. This is gonna be a little. We're gonna circle this and say oops in a few weeks, right?
Maybe, right? Maybe. Yeah,
love it.
All right. Other headlines I saw: Berkshire, so they trimmed their Bank of America position just a little bit. He still owns
dude,
he owns a gajillion shares of this stock. So
I mean, I know Warren Buffett is not a trader, but if you weren't taking profits in the banks a little bit, at least on the trading positions last week, crazy, because those charts just went berserk. The banks,
yeah. And
that was from what? That's the 13F. So that happened back in June. Then that's old news.
Right? This was not a 13F. This was a filing from last week.
Berkshire.
Yeah.
A 13F filing.
No.
Then what kind of filing?
Oh wait, because they're a 10% owner. That's what you're saying?
No, that would be a D. The F is the quarterly.
No, right? So this is not a quarterly filing.
The quarterly should be hitting July 15th. So that would make sense. 13F filed 45 days after
we got these already. We got all the Fs already. They're out. They've been out.
I don't think he's a 10% owner or a 5% owner of Bank of America. I don't know.
He is.
Is he? Then he's got to file Ds or Gs.
This was a Form 4, man.
Form 4?
Yeah, I'm looking at it right now.
Well, I don't look at the sales, so.
I know you don't. I'm looking at it right now. Form 4.
Fine.
Sold it last week. Whatever. He owns a gajillion shares.
Good work.
Moving on. All right. I don't know. That's kind of really it. There's really not a lot going on outside of everyone sort of looking around, waiting to see what's going to happen, the ramifications from Biden and Harris and Trump and all that. Outside of that, not a lot going on, right?
No. So I'm just looking through my little sell side notes. A couple upgrades in the world of solar energy. First Solar rallying this morning. Price target raised at Piper to 250. They also raised their target on Solar Edge. DQ, which I think is a Chinese solar name, announced a $100 million share repurchase program, which I didn't know that solar energy businesses could repurchase shares. I didn't know they had any cash loss.
Oh, don't be mean.
That's interesting.
Don't be mean.
Listen, I am interested in Sunrun, SunNova. You got nice bases there. I think everybody's just so over solar. These charts have been absolutely killed. I think they start to work in this kind of a market, right? This is an interest rate story too, just like biotechs. These are cash-strapped businesses. Lower rates, far better than higher rates. So I think you start to see some names work there. Some other things that stood out in the pre-market this morning. Verizon's down 3% on earnings. I think we talked about that.
Verizon down 5% on they had earnings. Look at that Verizon chart, how tight that thing is. Oh my gosh.
And you're 100% spot on, Spencer, about the Sentinel-1 sympathy bid. I just see a note here, came across the wire not long ago. Sentinel-1 continues to see a bid off of the CrowdStrike headlines. So it seems like CrowdStrike's loss is Sentinel-1's gain. So maybe instead of selling your CrowdStrike, you just buy some Sentinel-1 and hedge it that way.
Maybe. Why is cannabis up a lot today? That's interesting. Is there a headline that I missed?
No, Mondays are slow. There's nothing here.
Yeah.
Merger.
Shit, what was I gonna say? Oh yeah, CrowdStrike. CrowdStrike was always, for whatever reason, it always had the highest multiple of any stock in its peer group, and I never really understood why. I guess maybe because they have all these important customers that rely on them for the sort of thing. But
well, you get what I'm saying, right? You analyze the customers of a business. That's like a cheat code. All of these companies that were down last week or were having issues, they pay CrowdStrike. I think that's pretty big.
Yeah. I saw some videos from the CEO on Friday, and didn't said all the right things, but man, he looked ragged. He looked like he hadn't slept in 3 days. So I'm sure he hadn't. But
it's a tough thing.
Whew, not fun.
In the world of cryptos, Riot is announcing earnings today. They might be on their call now. I don't know if it's pre-market or after the bell. So that's movement there. Reddit teams up with the NFL and NBA to boost revenue. I don't know what that means, but volume coming into stock pre-market.
I'm this close to getting shaken out. I mean, it's up 4% today, 3% today, but
I'm with you, dude. I'm using the pivot lows. I'm out below 65.
All right, that's fair.
What else?
You want to bring on Mr. Cully?
Yeah, let's do that.
Ian, you here? He's here.
And all the big tech stocks are ripping this morning. You know, after some weakness last week.
Oh, because the Qs have did you forget about me?
Yeah, that's right.
Did you forget?
Absolutely. I mean, Google's up 2.25% here. Microsoft working this morning. So here we go.
I saw a lot of posts over the weekend about the tech sell-off, and then that got me thinking, what is it? Quantify a sell-off. What
seriously?
We know what a correction is, and we know what a bear market is, but what is a sell-off? Is that 5%? Is a sell-off half of a correction, which is half of a bear market?
I like that. Yeah. Sell-off is 5. Let's do that. Correction's 10. Bears 20.
It has been decreed.
Crash is 40.
Crash is bad. Yeah. All right. Ian Cully, he's here. Let's do it.
End of the world is 80.
80? Shit, man. Oh.
Good morning.
Hey, what up, man?
What's happening?
How are things down in Florida?
Hot. Hot
No
and
kidding.
sticky here on the Gulf Coast.
Gross. No, thank you.
Yeah. Yes, sir.
What's up, brother?
What's happening?
I heard Nat Gas. Saw it coming across the wire this morning.
Yeah, pulled back to that $2 level.
Dude, how about this UNG? I know it's one of those trash vehicles, but look at how clean UNG is. You can't just play it off those lows.
You can play UNG,
right? Short term, just trade it off the lows there, man.
Yeah, absolutely.
You got in last week, bang! You're already up 4%. All right, talk to me about currencies because I look at the pound and I think, oh, lower dollar, it's coming. And then I look at all the other pairs, and I'm not thinking that. I look at the euro, I look at the CAD, Aussie, and it doesn't seem like lower dollars. Pound looks good. I could draw a continuation pattern. I could use trend lines and make it look like a resolution right now.
Right.
The other's not.
You could do the same thing with the euro.
Yeah, okay, draw a funky line.
But I mean, it can go either way. You zoom out on the Aussie, you zoom out on even the CAD, the New Zealand dollar. They're coiling.
Okay.
These are consolidations that could either resolve higher or lower. And last week we got that failed breakdown.
You're saying
in the dollar index.
The consolidations that began in 2022, right? These just long ranges. Yeah.
Right. So yeah, it's still messy. It's still really messy and no decisive action yet.
And what about crude oil?
I think crude's heading back to 70. We had a breakdown last week, somewhere down in that range. And I think when it does, we back up the tanker, fill it up.
Wow. I mean, heating oil looks terrible. I guess if you zoom out, you're right at the prior cycle highs there around 250. That's interesting.
Yeah.
But this one's not far from cycle lows. All right. And then energy stocks, it's just continues to be a waiting game. If the scenario that you're talking about is to play out, we're just still in this range in XLE.
Yes, I think so. I mean, we've seen in the past, energy stocks have done well while crude oil hasn't. I mean, we can see that again. I wouldn't be surprised if that happens. Starting to notice the E&Ps and services names beginning to outperform the refiners.
E&Ps outperforming refiners. Is it risk on?
Yes,
I think so too.
I think so. Yeah, It's something we didn't notice last time around. So we'll see if it actually like takes hold. This is really short term stuff, but
and how about oil field services?
Get a lot of answers here in the next like month or so.
And what do you think about oil field services? Like XES is not far from taking out pivot highs from earlier in the year or last.
It looks a lot better than OIH.
Yeah, it does. I wonder why. Yeah. Oh wow, really does. Yeah, XES looks good.
Yeah.
By the way, speaking of gas, I was texting last night. My buddy lives in Chicago. Couldn't believe how expensive gas is in Chicago. It's like $4.50 a gallon or $4.30 a gallon. Which Chicago, I'm looking at a map right now. If you strip out California and like actually the entire West Coast for that matter, Chicago's got like most expensive gas in the country.
I wonder why.
I don't know.
That's interesting.
Yeah. Wild. Anyway. Okay, wait, what is this new chart that we just added? Oh, that's the CO2 report. Want to bring that up?
Yeah, talk to me about positioning, Ian. Anything standing out? So we do this every Friday with Ian's commodities note. Ultimately, we're trying to watch the commercials here and be on the same side as them when they're at extremes. I see soybeans 100%.
Yeah, I mean Swiss franc, British pound, Australian dollar.
Wow.
Coffee near extremes as well. Silver. There's a lot of extreme positioning right now in the markets.
And how do these charts look? Because we take the positioning, right? That's like step one, and then we look to price for confirmation. So, you interested in any of these?
I wrote a post recently about the Canadian dollar that was looking interesting. Cotton also looks interesting.
Yeah.
The issue with cotton right now is open interest is pretty high. I'd like to see open interest decline.
And tell me what does
price
that mean?
Consolidates, forming up, a bullish consolidation. I'm not really seeing anything yet, but there's, when we see these extreme levels of positioning, it gets us up out of our seats.
Cotton's here. This cotton chart's really interesting, Ian. You were testing the lows from October 2022, so the cycle lows, and you got a sweet momentum divergence in place here, and price continues to hold now 3 times since just June.
Yeah, I think we're like 75 and a quarter is what we're looking at for a breakout in cotton. But again, I think it's gonna be messy here for a while.
Yeah. And last but not least, what are we seeing in the metals, industrials, and the shiny stuff?
Metals aren't looking great. I mean, in terms of base industrial metals, there's a lot of failed breakouts that and some breakdowns, especially looking at rebar breaking down last week to multi-year low.
I mean, wow. And what a fake out from copper earlier this year.
Yeah,
made a new high, failed miserably, and now it's making a fresh low, lowest level since April. Woof.
Yeah. Gold's breakout or failed breakout whipsaw last week. Pretty nasty on the daily chart. You got that bearish divergence.
Yeah.
Bigger picture, it's still a sideways range bound market within an ongoing uptrend.
Ian,
yeah,
nothing to get too concerned about right now with gold and precious metals, but a great opportunity to protect your open positions though, for sure.
Yeah.
Ian, I was just thinking, and feel free to correct me if I'm wrong, because I very well might be wrong, but this is a very broad generalization, but it feels like whenever I talk to you about commodities, right, there's really only 2 states of the market. There is not a lot going on, or holy shit, this thing is ripping right now, like on fire. It's really only one or the other. It's really quiet, or it's ripping.
Yeah. Or falling apart. Yeah, but yeah, it's
okay.
Yeah.
Or falling apart. Well, falling apart comes after the rip, right? So I just feel like that's everything that you say. It's either one or the other. Like either this thing is ripping, making a historic move, or
it's kind of the nature of commodities, though, isn't it?
I mean, price, just markets in general, price contracts and expands.
Yeah. They go, Spencer.
Yeah.
When they go.
But yeah, watch out for Natty Gas.
Nat Gas, not for the faint of heart.
No.
No, definitely not.
Natty Gas will get you.
Yeah.
All right. I know that Steve's at a recess, but I have a little bit of recess. Ian, do you have anything for recess? You want to share? No,
not really, but I'd love to hear what you guys
All
have
right,
going
well,
on.
well, whatever. I'm gonna do it. Went to Fogo de Chao over the weekend, which is an upscale Brazilian steakhouse. I think it's actually a national chain. There's a few here.
One they bring it around and they're like chopping the beef off right.
Yeah. And again, if you've been to one Brazilian steakhouse, you've kind of been to all of them. But this was definitely like a nicer one. I will say, I went on Saturday. I felt like dog shit all day yesterday. Because I ate so much food. It's disgusting.
But it's just protein. You should be okay.
Yeah, it's mostly protein. I may have had the cheesecake creme brulee at the end, which was a mistake. But there's 80% protein, right? 85%. And there's some wine was had, so But anyway, great experience. Highly recommend if you are in the market for a nicer restaurant, special occasion, birthday, whatever. Fogo de Chao, really can't go wrong. I did have the meat sweats. It was not yesterday was not fun. And that's my other recess is really more of a PSA. Our next live event is going to be this Wednesday. Strazza and JC's next live event this Wednesday at 4:00. If you want to be there, you can click on the link, the very first link in the description, right here.
Very excited about this.
Very first link, the top of the description on YouTube. Click on that link. It'll take you to a page.
This is a really cool new thing that we're finally doing. We've been doing internally forever, and we said we got to find a way to share this. So I'm really excited about this one.
Yep. Yeah, that's basically the crux of it. A thing that we've been doing internally, and now for the first time, we're doing externally. So, there it is, Wednesday, 4:00. Use the link in the description, and we'll talk more about it, I'm sure, on Wednesday and Thursday.
Great.
That's pretty much what I had. Let me look at the doc. No, nothing we missed. Today is Monday. So wait, is Sean back, Steve? No, he's not.
I don't think so.
No. Okay, so we're doing the Flow Show tomorrow, not today.
That's right.
The Flow Show will be tomorrow. We talked about this last week.
Yeah.
So no Flow Show today. But those of you who are members of AC Gold Rush, you will, of course, get the Gold Rush video with Mr. Cully. He does every single Monday. And that's what I have to say. So thanks for watching. Thanks to Dean Christians. Thanks to Kenny. Thanks to JC for gracing us with his presence. Ian, everyone in the chat, go make money. Be good.
Happy Monday.
Happy Monday. And I guess we'll see you tomorrow.
Bye, everybody.
See you guys.
I can't take no loss. I don't need no